Today we're going to talk about turnarounds in investor relations. And turnarounds come down to two things, really. It's resetting your financial guidance on the fly, and secondly, educating investors about the items around your business that they're most uncertain about. And the problem is that most of the time companies only want to stick to themselves and what they've published publicly and be very boxed in terms of how they present relative to other public information. Now, the easy button would be to hire Chuck Norris, because when Chuck Norris was an investor relations officer, the stock never went down because people were afraid that they would get a roundhouse kick to the face. I digress. So back to the key issues here in turnaround investor relations. The first issue is resetting financial guidance on the fly. And the key is that you need to take your numbers down far enough to what the lowest yet highest achievable number will be. And why does it sound weird like that? Is that you're trying to move the midpoint of consensus to a point where you know that there is a guarantee internally that you will likely beat that number. Why do you do that? Because by doing that, you remove the overhang that the stock might sell off in future quarters after the reset, because there's another leg down in guidance. The goal is if the stock flushes when you reset the business, if you've reset guidance completely, you remove that overhang of possible future downside adjustments because you're changing guidance again. Number two, you have to think about your business in terms of the secular trends that it faces and some of the key debates and places where investors don't understand what's going on with your business. And you need to take the opportunity to start addressing those items in terms of your narrative and your perspective. And I think the most important part out of these things, yes, these are the two items, but it comes down to the word relative. And a lot of companies don't think in relative terms. They think about themselves, they think about their own earnings materials, how do they fit in a vacuum. They don't really think about themselves when they talk to investors relative to competitors or the industry or what have you. It's all about us, me. Now, the issue is that professional investors think about everything in relative terms. Relative valuation, relative to consensus, relative to the industry, relative to a specific competitor, relative to a year ago, relative to a quarter ago. And as soon as a company starts to adjust its perspective and start thinking and discussing in relative terms in combination with resetting guidance and educating investors on those secular themes that are troubling investors, that's how you get a successful turnaround and valuation unlock in investor relations. With that, thanks for watching. Always here to help.